Hey guys, I'm back in town after a few days off. However, the market was definitely at work all this time. It's made things very exciting across many different asset classes. Whether that excitement is good or bad depends on how you're playing what's going on here. And we have Bitcoin to start off with. I'm going to go over a bunch of the cryptos as well as the S&P 500, the Dow, just because we're seeing a lot of interesting correlations between these in the recent past. So this is Bitcoin short-term 1 hour view. And it's looking more and more likely that we may have that lower low after all. We have clear 3 waves up, ABC, and we've gone pretty deep. I wouldn't say we've invalidated the 4th wave potential, that this is actually a 4th wave down for our leading diagonal start this off, but we are seeing a little bit less encouraging action in a lot of the altcoins. So there, that would be our 4th wave. Otherwise, this could be a 1st wave down with us getting ready to take off. Well, not take off, but possibly slide down in a 3rd wave. I'm going to shift to Ethereum because I have a slightly better markings on some of the other coins. It's the same story. Again, we've gone pretty deep. If it is a 4th wave, we could still have a chance to bounce, and we'll be calling a 5th wave up for a leading diagonal. But right now, that red pattern is becoming more and more likely. Bitcoin Cash. Here we go. So this is where it's a bit more clear. I have my red markings. Again, all these coins are following basically the same pattern in which we have possibly some kind of ABC up or 3-wave pattern, 3-wave rally. And we have what could be considered a 5-wave impulse down right here. So it could be a 1, 2, 3, 4, 5, something like that. That could be a wave 1 down with a 2nd wave bounce. That could have been a gentleman's exit depending on your own strategies. Could have been a chance to lighten up some coins. And well, we may be in the midst of that smackdown. If this is what's happening, then we got the 3rd wave below us of this final C wave to finish off this correction. That would very likely take us to 254, but as far down as the upper 190s range, something like that, with an ultimate bottom in the 170 to 180 range. This pattern is basically exactly what we're seeing pretty much in every altcoin. I'm going to go through them relatively quickly. Ethereum Classic, not as clear of a 2nd wave bounce. Maybe this whole thing was a 2nd wave bounce, something like that. Litecoin, same kind of thing. Had a very, very clear bounce. 1, 2, Doge. Doge is just doing whatever. You could call that a 1, 2, Dash. When you look at Dash, same thing. You got that nice big bounce here. And this is very similar to what we've been seeing in the S&P 500, in which we had, I guess it wasn't an insufficient bounce. It wasn't the deepest 2nd wave bounce, but we have the same downside setup in a lot of these coins. So this is Polkadot. It's a bit more clear here. 1st wave, maybe a truncated bottom, or maybe that's the 1st wave down. 2nd wave into this box for about a 38% retrace. And we got a ways to go. So I'll be updating these as we go. Chainlink, I'm going to have an update coming out on this probably as my next video. But there's no real 2nd wave bounce here present as in other coins. Solana, there definitely is. Stellar Lumens, definitely, you could call that a 1, 2 with the 3rd wave in progress. EOS, same kind of thing. This actually looks like a much cleaner 2nd wave with a 3rd wave down. And I'm going to keep it on this for just a second, because while I am leaning towards red a little bit right now, I'm still calling it 50-50. This thing could turn right around and prove us all wrong. So nothing has technically invalidated yet. Now in EOS specifically, looks like we have a bit of almost a double bottom. So this could be an A, B with a C wave coming to finish off our 5th wave. That would be a bullish sign. But that green pattern, or the orange pattern in this case, that's what I've been using on the short-term charts, would not evaluate until we broke our low from either February 24th or January 24th, which depending on which coin, those could either be the low or could be a double bottom, whatever it is. That would be your point of invalidation. I'm going to shift over to Polygon, Matic Network. You could call that a 1, 2 down. SHIB, similarly, I wouldn't say it's as clean, kind of a shallow pullback. So while those are the short-term charts for cryptos, just kind of want to demonstrate what we're looking at the S&P and the Dow. So that is a jumbled mess. I'm going to shift back over the Dow and the S&P here. So here we had a correction start way back in very beginning of the year. So it's been grinding along for almost 5 months. We probably have 4 waves down. I'm sorry, 4 waves down. I'm going to put on the 4-hour chart. We probably have 3 waves down here, clear 3-wave bounce. And we're probably very likely finishing off a C wave for a much larger pullback. This box kind of has this is kind of where we'd expect a standard retrace to end. So we are aiming towards probably anywhere from about 41.11 all the way down to 39.57, 39.60. The reason I point this out is that the depth of this would probably closely resemble what we're seeing in the cryptos. So it would still align with us having a deeper crash in the cryptos. When I look at the Dow, the story is similar. We definitely have what looks like an incomplete correction so far. Usually your correction will have a C wave with a 5-wave impulse to finish, and we don't have anything like that. As a matter of fact, you call that an A and a B and a C, maybe a B wave bounce. That C wave could have been sufficient to finish this off, but our rally since then has been best describable as a 3-wave zigzag pattern. So if that is the case, we expect to fall in this box down here below 32,000, something like that. So we're seeing similar patterns across multiple asset classes, across many sectors in the stock market. So cryptos are not alone. Now I'm going to shift over the bigger picture here, put this on the daily view. And well, this is Bitcoin. So really our alternate pattern, the red patterns that we have, I'm going to shift this thing back. They're getting much stronger. Doesn't mean anything's validated. The green and purple could easily get a stick save. We could have this thing bounce right back up. It would look fine. But if our supports break, if we have that low break around, I think 32,900 for Bitcoin specifically, very likely we're taking a trip down below 30,000, as low as 24, 25,000. That would be about the range for Bitcoin. For Ethereum, same kind of thing. We'd be looking for a low somewhere under $2,000, as low as 1,500. So once again, if you need to take some chips off the table, if you're more conservative, doesn't hurt to take some. I would not panic sell, especially because any kind of crash we would see would be relatively short-lived. Bitcoin Cash, $185 is what I would be looking for. Ethereum Classic, 1425, same thing. This has definitely a clear 3-wave pattern. And while Ethereum Classic was leading, it also has a very deep pullback so far. So if we see any kind of rebound, I would look for Ethereum Classic to lead the way. So if you guys are invested in multiple coins, or if you're just playing a few, I would definitely be keeping an eye on Ethereum Classic, again, because it's been giving us earlier signals than most of the other coins. Litecoin, not looking too promising. It's pulling back pretty hard. I'm going to go to Dash, because Dash had been somewhat of an early indicator, and it too looks like it's needing that lower low closer to $61. And I'll reiterate once again that I am not calling red primary yet. Red will not become primary until our support breaks. Obviously, Polkadot doesn't quite have that line in the sand, but something like Dash does. So if we break 70, whatever the low was on February 24th, then red is my primary. And I wouldn't expect us to have too much to go. And the other thing is, of course, this is Chainlink. If we do get that spike down for Chainlink down to below $10, it would very likely be a spike down. That's what I'm calling a spike down. Usually you get that pullback, massive negative sentiment, and then it reverses very quick because we exhaust the selling pressure very quickly, and you typically see a spontaneous reversal very quickly. Stellar Lumens, 16 cents, still the line in the sand. We could see this going down to 10 cents or lower. EOS, finally, that black hole looms below. Haven't forgotten. We'll never forget the black hole. Bottom of the box falls at 171. So that would be a very likely target if we do end up falling red. And for EOS, support is around, I think, 186. So if we do that, get to 186 or lower, or if we break 186, then red becomes my primary pattern. So that is the state of the cryptos in a nutshell. I'd say it's gotten a little bit less bullish. So we're going to see if the supports break. I'll be putting out plenty of updates this week, in addition to possibly putting out something on how to hedge your cryptos, maybe using BTO put options. So I'm going to have to do my homework on that before I put a video out on that. So stay tuned, subscribe so that you don't miss any updates. And if you enjoy my video, please give me a like. Thank you. And until next time, happy trading.